You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Adam Hamilton, CEO of ZealLLC.com. Welcome to the show, Adam.
Hey, Jim. Great to see you again.
Gold, you say, is now just the shiniest thing on the planet. And unlike the big gold prices back about 6 years ago now, or 8 years ago, there's something different about this rally.
Yeah, Jim, it's been absolutely amazing. Gold was really, really tough in Q4. It fell to a 6.1-year secular low, just above 1,050 American dollars per ounce, the day after the Fed hiked rates for the first time in 9.5 years. And as all your listeners remember, everybody just hated gold in the fourth quarter of 2015. It was going to zero. It was doomed. It was going to spiral lower. It was a barbarous relic, pet rock, I think the Wall Street Journal said late last year. Just derided as the worst possible investment in the universe. And there were a few contrarians holding on. And this year's been absolutely amazing. I've had just an amazing gold rally in 2016. And this rally is really different, as you point out, from everything in recent years because investors are coming back in a big way. Between 2013 and 2015, when gold was falling, that was due to the U.S. Federal Reserve's levitation of the U.S. stock market, sucking all capital away from alternative investments. If stocks do nothing but rise, if central banks are all but guaranteeing that, why buy alternative investments? So gold investment demand withered. But investors are coming back to gold in a big way in 2016, and we haven't seen anything like that since 2009, early 2009. And that happened to be in the initial months of a 167% gold bull that ran over several years. And so it's really exciting to see investors come back. So this gold rally we've seen in 2016 is radically different than the future short covering driven ones between 2013 and 2015.
It's been great news for the junior gold miners who have been struggling to hold on.
Oh, absolutely, absolutely. One of the biggest challenges the miners have faced is that they just can't raise any capital. They don't want to sell shares, and their shares are, down near crazy secular lows. That main HUI, Huey Gold Stock Index, that fell to a 13.5-year secular low in January. I mean, the stocks were at decade-plus lows, and it's so hard to issue shares. No one wants them, there's so much dilution, selling a piece of your company at such low prices. But with the gold price rising, investors are getting interested again. Now, gold stocks have actually been the best-performing sector of 2016 by far. That Huey index I talked about, that was up like 75% in 6 weeks from that mid-January low. And it's just incredible how people have come back to this sector. You'd think after several years of just this most brutal bear market you can imagine, people wouldn't touch it with a 10-foot pole. But it's great to see contrarians come back in line, remember just the great value of buying gold stocks at dirt cheap prices. I've been doing research lately on the cost structure of these companies, and their latest results, the reporting, are actually fourth quarter 2015. And gold's average price then was the lowest. It was around 1,100, 1,105. It was the worst since the fourth quarter of 2009. Yet these companies were still making about $200 per ounce between the 1050 or the average gold price of 1,100 and their all-in sustaining costs. And so they were a lot healthier even in the fourth quarter of 2015 than anyone realized. But now investors are coming back and have bid gold $200 higher. Now they're just going to be rolling in money in Q1. I can't wait to see the first quarter results when they come out about 6 weeks after the end of the quarter here.
The Canadian government sold off the last of its gold reserves the other week, and a lot of people are asking, why would they do something like that with the price of gold going up right now? Why wouldn't they hold on? And the theory so many people have is that Canada has so much gold in the ground that they could just simply tax all the gold miners here, say 10% of their output, and they could refill their reserve anytime they wanted.
Very interesting. I saw that news where the Canadian Central Bank liquidated that last little bit of gold. I mean, it was trivial. There wasn't much gold there. It was a small sale in the grand scheme of the gold world. And that makes a lot of sense, the theory you just advanced here. I don't know. Down here in the States, we wonder about your new prime minister and his wisdom and the policies and what's happening in that country. And you guys look at our politics in America and probably think we're just insane with these primaries right now. But who knows what's going to happen in gold? But it's just amazing that central banks will just over and over again sell it right at major secular lows. It's greed and fear are the biggest enemies of traders, and central bankers are human just like you and me. And they make the decision to sell low at the worst possible time. They make the decision to buy high at the worst possible time. So it's really unfortunate. But in general, central banks have been buying. If you take them all across the whole world over the past 4 or 5 years, really consistently, they've been a sizable source of gold demand. So thankfully, that Canadian official gold sale, seems to be an anomaly, Jim.
Well, and I'm just taking a look at the COMEX gold, paper gold ratio versus the actual, physical gold that people are holding on to. The ratio is something horrible. It's over 500 to 1. In other words, you have a certificate that says you own so much gold, but in reality, that gold may be hard to put your hands on.
Yeah, it's crazy. I see those numbers too, and it just blows my mind. Futures trading is such a great distortion of reality. In the U.S., or actually in the world, the main gold futures trading is the U.S. COMEX futures, 100 troy ounces of gold, one contract. And the futures exchanges allow you to trade that at 30 times leverage, which is just insane. In the U.S. stock markets, the legal limit since 1974 per the Federal Reserve is 2 times leverage, 50% margin. But you can trade futures with 30 times leverage, and it's just a casino. There are hedgers there, but it's all cash settled. No one's actually buying futures to get gold. And, if those futures traders, even if just an infinitesimal fraction of them demanded delivery of their contracts on gold, the whole system would collapse. A lot of gold analysts believe that there's all kinds of manipulation in the futures market that contributed to the gold secular lows late last year, and it's hard to discount that with that crazy kind of physical to paper coverage ratio. It's just practically zero.
Before we went on air, we were chatting about places like Japan and Germany, where they have vending machines where you can buy physical gold. You put in, say, $100 or charge $100 on your credit card, and it'll give you a little wafer of gold that you can take home. Now, in Canada and the U.S., we don't have anything like that. And, of course, I said, well, how long would it take for somebody to steal a forklift and dump that gold vending machine into the back of a stolen truck? So maybe security is a problem. But would you think that would be a good idea to have gold actually physically available to the person on the street?
Oh, it'd be an amazing idea, Jim. I first heard about those vending machines, 5, 6, 7, 10 years ago. I don't remember exactly when, and I just like, wow, what a great idea. You and me, and I'm sure most of your listeners have bought gold coins, and the process works fine, but it's kind of intimidating for a gold neophyte. You go to this store, they have these glass counters with a million different coins. They have rare coins and bullion coins and all these different dates and vintages, and it's just intimidating, and you're totally at the mercy of the coin dealer selling the gold to you. And most of them are honest. They're really good people, of course, but and also the coins are expensive. An ounce of gold today, over $1,200 again, that's a lot of money for most people to spend. If they go to a vending machine and, put in $50 or $100 a month, whatever their surplus is from their pay that month, and buy a little bit of physical gold and not to deal with, salesmen or pressure tactics or trying to figure out what's best, just buy the most bullion they can get for their money, I think it'd be a brilliant idea. And on the security, there's around the U.S. and I'm sure Canada, there's ATMs all over the place, and they have a lot of money in them, I'm sure, and they're relatively secure. So I'm sure they could secure such machines, and I think it'd be just a huge boon for the physical gold market to make it easier for the average person to buy physical gold.
Yeah, well, I guess if I'm going to get into the vending machine business, and a friend of mine who is in it, he says it is a gold mine. I wonder if I should say maybe we should start vending gold and see how that works. Because I know certain parts of Vancouver. I'd love to be involved in that business too, man. Yeah, well, there's certain parts of Vancouver. I know the population would be very keen to be into that.
Yeah, definitely. I was thinking you were talking about a criminal element at first, and I was going to say the criminals in the States don't even know gold's valuable anymore. But you're talking about the Chinese immigrants with their cultural affinity for gold, and there would be a huge demand for a lot of those cultures around the world, especially Asian ones. They've known about the value of gold, the merits of it as the ultimate portfolio diversifier, portfolio insurance for millennia, and they've never been duped by Western central banks like Americans and maybe Canadians have to think gold is useless in this modern society. Nothing could be farther from the truth.
Well, I saw a stand-up comic do a little bit on TV where he had a bar of silver and a big chocolate bar, and he asked people, what would you rather have? And they all took the big chocolate bar, and I'm saying, buddy, you just turned down $175.
Oh. Yeah, that's just beyond the pale. But, with the central banks and Wall Street just, drilling into people's heads that gold's useless for years now, a lot of people believe it. A lot of people don't do their own research, which is really unfortunate. A lot of people don't study monetary history to some degree or market history. And, I think as people lose confidence in central banks globally and their ability to manipulate stock markets higher indefinitely, gold's going to come back in the forefront for a lot of people who wouldn't even have considered it, a couple of years ago.
We'll have more with Adam Hamilton right after the break.
Bird Dog, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Adam Hamilton. Adam, I noticed the price of copper has made a big jump over the last few weeks. So many people have told me they call it Dr. Copper because it's a good indicator of the worldwide economy. But is this a false bump that people should be careful of?
Jim, I think it is. I've been watching that copper rally too. It's absolutely amazing. I agree with you. It really coincides almost exactly with the bear market rally in the U.S. stock markets. The S&P 500 bottomed back in mid-February and just shot up like a rocket in the several weeks since then, like 9.4%, I think, as of earlier this week. And, you know, copper went up with it. Crude oil went up with it. I've done historical research on crude oil, and crude oil is really highly correlated with the U.S. stock markets. The futures traders trade it based on U.S. stock markets because they think that, hey, if the markets are going down, it must mean the world economy is slowing. If the world economy is slowing, therefore oil demand is going to drop, so therefore we should sell oil. And I don't know, you know, that's probably not right most times since stocks move in emotions, but, you know, copper seems to be just following the stock markets from my perspective, just like crude oil. The main fundamental driver of copper prices is the London Metals Exchange stockpiles. They have warehouses all around the world. London's the main trading hub for copper, and they have these stockpiles, and they're kind of like a buffer for all the world's supply and demand. And when those stockpiles get low, copper should be able to rally. When they get high, copper should sell off because the supply is more abundant. It's kind of like a proxy for overall supply. And those inventories aren't super low. I was just looking at them last week, and you know, they're on the lower side of the average, but they're certainly not down to low extremes that we've seen in recent years that have tended to drive copper higher. So I think it's a stock market rally phenomenon. Everybody sees oil rally, stock markets rally, therefore they want to buy other commodities. They see gold rally for different reasons. They want to buy other commodities. So I'm really concerned that the copper rally is going to collapse once the stock markets roll over.
And with the stock market, the one area that's been growing is gold stocks.
Oh, gold stocks are just incredible. Yeah, best performers of the year. As I mentioned earlier, up like 70-75% in 6 weeks off the late January lows. And, you know, people don't believe it, but their fundamentals are really good. We also discussed this earlier. You know, they had all-in sustaining costs, which is what you need to keep producing your current production levels indefinitely, including exploration, mine development, construction. They're around $850 per ounce for the industry, even when gold was trading at $1,050 back in December. And so now at $1,250, you know, the profits just swelled gigantically, like doubled essentially. And so the gold miners are going to make so much money in the first quarter. They're going to be able to finance projects, buy back. I guess they won't buy back stock, but they'll raise their cash coffers. They're just going to do amazing in this environment of higher gold prices, especially since the ones that are left are so lean after surviving the dark years. And people are making fortunes in these things. A lot of the best smaller miners are up over 100% this year. And the gains have been incredible. Yet, I don't think the gold stock run is done, Jim. You know, gold stocks are beaten down to such fundamentally absurd price levels, 13.5-year secular lows in late January, that they have a long ways to run yet. I like to take a ratio between the Huey Gold Stock Index and the gold price and look at that on average over time. You know, gold obviously drives gold stock profitability, the gold price, and profitability is what determines where stock prices will go eventually, where they should be valued reasonably, fundamentally. And, you know, the Huey should have been north of 400 back in late January when it was trading around 100. And, you know, this week it's around 170, 175. So we should have another easy double from here just to mean revert back to December levels, let alone Q1 levels for gold, which have been much higher. So gold stocks are extremely exciting. The opportunities are vast there still.
I remember 2 years ago they said the break-even price for producing gold was $1,100 an ounce. Well, that's amazing that they've got it down to $850.
It is amazing. You know, it's been really tough. It's been do or die. You know, a lot of companies have gone under over these recent years, and they've had help as well. For instance, the plunge in the oil price since mid-2014. What's oil down 75-80%, you know, over that time? And energy is one of the biggest cost components for most gold mining operations. So that's helped tremendously, helped them lower their all-in sustaining costs. They've also been doing high grading, which is less desirable. As you know, that's when they go for the best parts of their deposits, the highest grades, where they can move the least amount of rock, get the most amount of gold out of it. And that kind of steals from the future for the present, but nevertheless, it helps keep them in cash and operating through lean years, the bottoms of the gold cycle. So yeah, the all-in sustaining costs have come down tremendously over the past couple of years. You know, $1,200 was the number they threw around in the States for a couple of years, like 2013, early 2014. And to see them around $850 US all-in sustaining costs in Q4 2015 is absolutely amazing.
Also, too, because they've had to cut back production to save costs and so on, probably part of the staff that they cut to save those costs have been the explorers, the geologists who go out and look for new deposits. Will they be able to go out and look for new gold now that the prices are going up?
That's been really tough. I remember last year reading a lot about Australian geologists, highly trained guys, multiple advanced degrees. These guys are earning over 100K, looking for gold deposits, and they just got laid off, and they ended up, serving coffee or slinging burritos or whatever, just minimum wage jobs, just tragic stories. And a lot of these guys have moved on. Maybe some will come back, but even if they do, Jim, it takes like 20 years on average now to get a gold project from finding the thing actually to a mine build, because government permitting is so onerous around the world. And so we're looking at just an ultra constrained, a crimped gold exploration pipeline for many years to come, at least 5 or 10 years, maybe 15 or 20 years. And so that's really bullish for gold, because even as the gold price rises, we're looking at 10, 15, 20 years lead time once they find new deposits, which are harder and harder to find since the low-hanging fruits have largely been found around the world. And the supply is not going to be able to rise to meet demand for gold. Interesting, one more point, Jim, if I may. The World Gold Council publishes the world's best fundamental data on gold. And back in Q4, and everyone hated gold, supply plunged 10.0% year over year. It was the first drop, since the stock panic, like in 2008, if memory serves correctly. And so supply is already falling late last year, and it can't come back in line because it just takes so long to get a gold deposit to production now.
Now, I watch some of those reality shows, Gold Rush, Baron Gold, and so on, and I think, well, these people seem to somehow, without a lot of expertise, find gold. How hard can it be? But how big of a role do these family miners make when it comes to the scheme of things?
That's a really good question. I love those shows as well. They're super entertaining, and they're really interesting. I live in the mountains of Colorado, as you may know, and I like to go pan for gold myself some Sundays. It's fun. It's cool to find little flecks in your pan. But per the actual hard data from the World Gold Council, what the industry calls artisanal mining is effectively zero. It's a rounding error. It's so little gold produced globally compared to the big mining operations. You look at Gold Rush, and they're trying to produce 1,000, 2,000 ounces a year, and then you look at a small mining operation doing 100K ounces a year, and there's just many of these around the world. Big ones doing, millions of ounces a year. So artisanal mining is really just a trivial % of global production. Oh, there's some countries with bad infrastructure where artisanal mining provides a higher percentage, because they smuggle the gold out of the country rather than doing bigger mines. The bigger mines just can't come in there because there's too much corruption. But it's trivial. It's inconsequential.
I've heard because of the high duties India has on gold, that if somehow you could smuggle $1,000 worth of gold into India, you can make 5 to 10 grand on it.
I believe it. You hear the stories. Every so often there's a story about some new smuggler caught, and the methods they use are just so innovative and, dangerous to one's health in some cases. And it's really sad how the Indian government's been, telling people that they can't protect their wealth. Indians have loved gold for millennia for sound reasons. Their government's been corrupt for a lot of the past, and their currency isn't the greatest, and there aren't many other options, and so gold's a great place for them to store their wealth, the surpluses of their labors. And it's really sad to see the Indian government try to tell people how they can protect their wealth, how they can't protect their wealth. So smuggling is a huge problem over there. But no matter what the Indian government does, no matter what duties they put on gold, no matter what taxes, gold demand just keeps steady or growing in India. So the government can't shut down these free market forces, which is pretty encouraging.
Well, I've heard smuggling gold is a much bigger business than smuggling drugs.
Man, that's crazy. It's incredible that something that's totally legal in a country has a black market that big, because the government's just being stupid about how they're dealing with the imports. It's horrible.
Well, of course, we know usually when governments get involved in the direct control of the economy or currency, it leads to nothing but disaster.
It's funny you bring that up, Jim. I've been thinking about the Bank of Japan. That went to negative interest rates, as you know, back in late January.
Yeah.
And all the governor wanted, Hirohito Kuroda, all he wanted was to see the yen drop and the stock markets rise, the Japanese stock markets. And the Nikkei has done the exact opposite. The yen's done the exact opposite. It's just a disaster over there. And, they've had bond sales they've had to scrap, because when they sell Japanese government bonds to Japanese people, Japanese people aren't going to buy them for negative yields. They're not going to pay the government for the privilege of lending money to them. And just this week, the 30-year yield on 30-year Japanese government bonds plunged a record amount to a record low. I mean, it's been a disaster, and I really hope negative interest rates don't spread around the world more than they have.
Well, the effect in Japan has been the average person has gone to their bank and withdrawn all their cash, and there's a run on home safes. They're keeping their money at home because at least you don't lose any value in it. Whereas with negative interest rates, of course, they're skimming a certain percentage off your account every day. And in Japan, I've heard from my Japanese correspondent, James Corbett, that in Japan, cash is still king. He said it's not unusual for a Japanese person to lay down 10, 20 grand in cash to buy a car.
Wow, that's amazing. It's really sad. That's a great advertisement for gold, too, because you can put gold in the safe at home. You can accumulate lots of wealth in a smaller space physically than with cash. And as the Japanese government or whatever government, prints money out of thin air to buy infrastructure or to buy bonds, quantitative easing, the value of that gold will go up as your own local currency depreciates. So I think that this negative interest rate trend or this super low interest rate trend will boost gold demand around the world because it's better to store than cash in a lot of ways. Obviously, you need cash to buy groceries or cars, as you said, but if you want to store significant wealth, cash is just really an efficient and kind of risky way to do it.
Well, don't forget, too, in Canada and the U.S., they have restrictions on cash. In the U.S., if the police find you with anything over a couple $100, they seize it. They say you're a drug dealer or you're out to buy drugs. Prove that you weren't going to do that. Reverse onus, which, by the way, I think should be unconstitutional because isn't it that you're innocent until proven guilty? But they say, oh, you want your $1,000 back? Well, it'll charge you, your lawyers will charge you 10 grand to get back the 1,000. So, in other words, they have, just from Canadian tourists, U.S. police have seized over $3 billion in cash over the last 5 years.
That's horrible. Government's so out of control here in the United States, as in many places around the world. And, we hear stories about a small businessman in the U.S. They have like a yogurt shop and they sell their product for cash. But in the U.S., there's these laws called structuring laws. You can't make cash deposits in such a way that some 20-year-old, 22-year-old uneducated bank teller thinks you're trying to avoid the $10,000 reporting requirements for cash deposits. And so they have these $50,000, $100,000 business accounts seized, and they don't get them back from the IRS for like 3 or 4 years. It's just terrible. Cash is not evil. It's not inherently wrong. The government's war on cash is really unfortunate. We're seeing more noise in that. I think the European Central Bank's Mario Draghi was talking about eliminating a $500 euro bill, Jim?
Right, and the U.S. is talking about getting rid of the 100.
Yeah, it's crazy. I mean, these countries are attacking their own currency, which is one of the ways they draw power and leverage international trade. It's just absolutely insane.
And, I mean, just where I live locally in Vancouver, a number of small restaurants don't take credit cards or debit cards because they're charged a fee on every transaction. They only deal in cash.
Makes perfect sense. If you're going to take a 4% hit in your sale in a low-margin business, why bother with credit cards at all?
Well, the war on cash now, and it's not just Canada, it's not just the U.S. I did a story recently. It's just about every nation on earth wants to get rid of cash because the government wants to start charging transaction taxes.
I've always been a cash guy. I always carry $500 cash in my wallet. I buy everything possible I can with cash. I don't like the idea of, say a health insurance company figures out I eat pizza once a week and they decide to raise my premiums because I go to a pizza place. And if I buy that with cash, no one knows I eat pizza once a week. I just like the privacy of cash. And I think any law-abiding citizen who's wary of government intrusion should like the privacy of cash. It's just a great, efficient, discreet way of buying the things we need every day.
And they said, well, it would eliminate things like drug dealing. Well, the drug dealers would just start accepting other things in exchange instead of currency.
Yeah, crime always exists. It's kind of like the arguments that if you take away guns, crime will fall. It doesn't. The criminals have guns, no one else does. And the same thing will happen with cash. There'll be some medium of exchange, whether it's other countries' currencies, gold, Bitcoin, whatever, that criminals will use to take delivery or to sell their goods for. There's no way that attacking cash is going to end, the criminal elements around the world.
Yeah, well, and don't forget, every country that's legalized drugs has seen a huge drop in the usage of drugs and organized crime. No one ever talks about that here in North America.
Yeah, legal competition. Colorado's been a case study for that in America here, and the voters here voted to legalize marijuana, and some crimes have risen, like kids trying to steal drugs. There's been a drop in like the more violent drug dealer type stuff. Adam,
has it been a riot in the streets? Has society gone to hell in a handbasket since they legalized pot in Colorado?
No, not at all. It's my family and I. We don't go downtown Denver very often, but we do for some events, and it's kind of strange to see the marijuana dispensaries downtown because they're not out in the suburbs. They're not out in most of the city of Greater Denver. So it's a really small area. There's only a few like municipalities where the city council's allowed the shops, and so there's almost no perceivable change. Although friends with high school age kids tell me that the drugs are a lot easier to get now, which makes sense. But you don't see anything societal wise in Greater Denver that makes you think that oh my gosh, it's going to hell in a handbasket here.
Yeah,
this is talk from someone who voted against legalizing it. just because I have young children. I'm a libertarian, but I don't want it easier to get for kids. But anyway.
Adam, thanks a lot for chatting with us.
Thanks so much for having me, Jim. Great chatting with you today.
My guest has been Adam Hamilton, CEO of ZealLLC.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.